Mr. Wood, how are you, sir?
Doing wonderful, Mr. Brown. How are you this morning?
Once again, better than I deserve.
Awesome. Glad to hear it. So,
So,
so
in the
anything
green
happen?
room.
Anything happening like last Friday in the market?
Oh,
I
nothing. What
mean,
are you talking about? There wasn't
really?
a crash or anything.
I mean, crash. Crash would imply like something bad, right? Like people lost a lot of money.
Well,
This guy.
yeah. Well, did you realize the loss or just a paper loss?
I took most of it because I anticipated today would be down again, and so far I'm right.
Yeah.
So, um, and also some of that stuff like we talked about last time. I mean, I showed you some of those options positions up, um, you know, 8,000%. I went ahead and took my 6,000% gain.
Good for you.
Yeah, so now I can buy back in. Right now, silver's down 5% pre-market compared to the Friday close, down at 80 at the moment. So, matter of fact, if you want to kind of fill folks in on what we were talking about, I'm going to make a slide here. We can jump ahead a couple slides in the presentation, but I'll create an image here off
Yeah, we
one
were
of the
talking
slides that I
about
just updated.
in the green room. We were kind of spitballing, talking about the crash of silver and gold, and Trump's pick for
Mm,
Warsh and how that
yeah, we're going
affected.
to talk about that because that one's interesting.
Yeah, and looking forward to hearing your thoughts on that one. But it's all a relative thing, right? It's like I don't, I mean, I have a lot of silver, and I didn't even blink at it. I mean, it's to me, these things happen. Like, and it's really no different than the chart you sent me the other day. And as Weimar Germany slid into the abyss,
Uh-huh.
you see this
Sorry, didn't mean to
crazy
add that.
volatility.
Mm-hmm.
You
Sorry, I didn't
see
mean to add that. Sorry.
No, that's fine. You see this insane volatility. I'll
Mm-hmm.
pop this back here for just now. And as the dollar is in its death throes, so to me, this is just one of those moments. I mean, and it's an
Mm-hmm.
opportunity to buy it because what's what's different this time, and I'm using the scare quotes if you're listening to us later, be, yeah, because artificial intelligence wasn't where it is. The technology wasn't where it is. Where
Mm-hmm.
silver and rhodium and all these other precious metals and rare earth metals
Mm-hmm.
um, are needed. So, and I think that we also saw market manipulation. I think we're seeing market manipulation right now. Um, yeah,
Say it ain't so.
Jeff's crash is relative. You better believe it.
Well, and
Uh,
I want to touch on Jeff's comment just a little bit. So here's a stump the chump question for you.
mm,
January 31st was Friday with the big crash in silver. What was silver's year to date and month to date because it was January performance?
I don't know.
Plus 15%.
Mm. And it went down what 30
Even
something
with
percent.
yeah, about 30-ish,
Yeah.
somewhere in there. So yeah, I mean you're right, and it's easy to get caught up in the one day move. So Jeff's absolutely right. Crash is relative, but we also need to, and this is where you and I talk across each other sometimes. Is I run both timelines.
Hmm.
You run one timeline.
I do.
And
That's
so,
correct.
this is also where like today's spot silver's down 5.5% here at the US. And that's another one to talk about is why didn't the silver price move much in Shanghai?
There you go.
It didn't.
And
So yeah. And the other thing putting pressure under silver right now is CME again raised the margin requirements for the futures market. They can
yeah.
just keep raising that. If they get up to 1 to 1 instead of like 10%
Hmm.
down, that will run the silver price right back down.
Here's the way I look at it. And again, I think that, if we're standing on a ship and I go, look, honey, the water's rising in the ocean. The water's rising. That's amazing. But somebody on another ship, i.e. the Shanghai market, is like, the water's not rising over here.
Yep. Yep.
Because it's denominated differently. So everything has to be pulled in its relative context.
I'm going to argue it's not only denominated differently, but the bigger factor over there is what is the demand in that market. And Shanghai,
True.
of course, is China, and China has declared silver a critical metal.
Yes. So have
And
we. We have too.
yep, we have
In
too.
October, November, it became a strategic metal.
And the difference is they're doing something about it.
True.
They're restricting selling Matter of fact, over the weekend, I think I sent it to you and TC. Um, they had told the Chinese people, "Hey, buy gold. It's safe. Put it in these depositories." And the depositories over the weekend went, about that gold. Yeah, you can't get that out. And they had little runs on the depositories, and the cops dragged people out. So instead of using an executive order like FDR did in 33, they just ran it that way, which has long been the theory that that's what the Chinese were going to do.
Okay. I love this conversation right now. I'm going to add on to it a couple things. So my buddy Taylor from Defenders and Disciples last week, he said he was flying somewhere and they had we need to shut the TSA down for just a little bit and reset and all this other stuff. And we're going to have y'all wait over here. And it's like, and then they sealed the room off. And he's like, well, because we need to make sure that y'all can't. He's like, I don't like that. I'm like, hell, I don't either, man. Mm-hmm. And I've said it before. Anytime that kind of stuff happens, I'm not in there. It's one of those things. Hey, put it in here. It's safe. Government's got you back. Put it in here. It's safe. And then they slam the door shut and it's over. I mean, whether you're talking about digital currency or anything else, I mean, I don't like that stuff.
Yeah, I'm right there with you. That's why I got my physical ounces as well, and then trade around that with the paper positions and even the options now. But it's different facets of the game. Not even different ways to play. It's different facets of the same game.
Yeah, and we're because we are, I read another thing interesting recently. It says it's hard to read the label on the bottle when you're inside the bottle.
Mm-hmm.
So think about that. And I think that's because we're in the middle of the U.S. economy and everything we own is denominated in these dollars and et cetera, et cetera. It's hard to see what's happening because we're in that. So, I have one horizon, and it is that the dollar is going to nothing. No different than denarius, or any other currency that has ever fallen. We will be just another in the long line. Now, how does that reset? What does it look like? I don't know, but I can guarantee you, silver and gold are going to go way beyond what they did before. Is it going to happen next year, next month, 5 years from now? I don't know, but I don't see it taking any longer than 5 years. Like I said, it meant nothing to me. And I hold a lot of silver and quite a bit of gold. Didn't mean a damn thing.
Well, and it meant, so I'm going to show my dichotomy here. I didn't for a second even consider, in fact, this is the first time I've even thought about the general idea of like, hey, maybe I should sell some physical silver now. And that would never, it could go down 80%. I wouldn't do that because it's not the purpose of that portion of the financial portfolio, right? But the paper stuff, yeah, I sold out of a bunch of that. I sold out of a bunch of options, did some other things within the paper market because those two different subsets of the same asset class, if you will, for me, run on completely different timelines and flexibilities.
Mm-hmm.
I was on the road on Friday. I couldn't sell the physical stuff because it's sitting right upstairs.
Mm-hmm. Would you have if you could have?
I'm sorry.
Would you have?
Wouldn't even cross my mind.
Exactly.
Right. But so we're talking about two. It's the same thing. It's silver, right? Some is paper, some is ounces. But in my mind, it's two completely different things with two completely different goals. My physical 100%. Stuff, I'm on the same timeline as you are, right? The other stuff is more of a trading vehicle as a means to an end. Like I buy NVIDIA stock. I have the same emotional attachment to NVIDIA stock as I do to my silver ETF. I'll buy it today and sell it tomorrow. I'll short it the day after that. I don't care. It's just a vehicle to better support my family. That's it.
Let's pull this up here and walk us through what we're looking at here, Will.
So I just made up a bunch of lines here because it makes me feel smart. So no, seriously, guys, this is SLV. This is the ETF for silver. Okay. And we can see from October last year, it became a meme stock, right? And we talked about that. But let's also look at, okay, what's our one thing as a investor / trader I look at is what's my downside risk, right? So if we look at the current price when I ran this slide, which was a couple of days ago, it pulled back to that yellow line there, which is the 50-day moving average, a relatively short-term indicator. 50 trading days is about 2 months. Okay. We could pull back another 11% and be to that. Typically,
Mhm.
nobody really panics when we cross the 50-day moving average. So that's good to know. Okay. That red line there, the straight line, that's a trend line I drew off the bottoms of previous lows, as you can see there, where it dipped off of that. That's just a chart analysis thing. We could pull back 30%, almost 31% to get to that. We could pull back 41% and some change to get to the 200-day moving average, which would be the long-term trend. 200 trading days is, there's 250 in a year. For some reason, we all use 200 days. 250 trading days, that is, in a year. So all that to say, there's room for it to go down more before we hit the panic button, right? So, and like we alluded to or talked about before off Jeff's comment, it was still up 15% in January. So the point there is, think about, I think we talked about this last show. Think about 2020 or 2025, either one. If Rich Brown had clunked me over the head January 1st and I woke up December 31st, each one of those years, I'd be like, hey, what'd the market do? 2020, you would have told me it's up 15%, whatever it was. 2025, about the same number. I've been like, oh, must have been a nice year for you guys. And you're like, no, a few things happened in between there, right?
Mhm.
Same thing here. It goes back to your time horizon comment, which is absolutely spot on. That, it depends what your time horizon is and what else happens. And as others alluded to in the comments, what's the manipulation do? They manipulated it back down after the GFC. It went up to 50. I'm looking at the chart here on the other screen. 2011-ish, it hit 50. We didn't hit that again until last August.
Mhm.
And for my, how do I put this? My non-physical silver, I'm not willing to sit and wait that long. There's better opportunities in the meantime. So this is something I pulled way back on Friday. I traded out of it. And right now that's looking smart because it's down another 5.5% in the live markets this morning, pre-open for the stock market. The other thing I want to dig into here is on the right here. So this is off AppMex's website.
Mhm.
Currently, spot silver is a little lower than what I show here. Here it shows spot 81.61. When I did this, and now it's at 80 and a half. Call it $80.62. Okay, AppMex here, and it may have changed slightly since then, but this was not even 20 minutes ago. They were selling, if you buy between 1 and 19 silver bars of silver from them, they're charging $96. And that changes. It's a live change, but you have to refresh the page if you go on there to get the new price.
So a
So the point,
$15 freaking premium.
yep. So that you were asking what that tells me, and what that tells me, there's still enough demand out there for silver that they're getting a $14 premium above spot.
Yeah.
So now that can, like you and I talked about, and I said it, and it means no offense to anybody, it's just a term in the industry. Are those people buying right now the greater fool?
Depends on
Maybe.
their time horizon, guys. Come on.
Well, it depends on that. I mean, I don't know about you, but I don't like eating losses even unrealized. So I'll
Mm.
sit here and wait for this to shake out, and then play it from there. So,
Well, let's get to some questions here because
yeah.
Don makes a point that I want to speak to, and I love it here. Guile
Right,
is on from the Philippines. Tony is
good to
on
see
from
you.
a frigid Southeast Georgia. Bruce is on up there in Michigan. He is coin number 481. If you want to find out if becoming a coin member is the right decision, please click the links in today's show notes. Don says a former big-time money manager, Ed Dowd, is talking about gold at $10,000 by 2030. I don't know if his crystal ball works any better than anyone else's, though. And before that's where I'm going with all this.
Okay.
On that time horizon, I don't know if that's right, but it's probably pretty freaking close. So I don't think anybody that buys, and of course, then you have the gold silver ratio relative to that price. And so anybody that's, paying a 90 something dollars for silver ounce today, not in vice, I think they're going to be fun if your time horizon is 4 or 5 years.
Could be.
Because it's
Might not be.
the dollar is we can't sustain where we are now. We just absolutely can't, and we're just piling up debt.
I agree all the way around.
Yeah.
So I mean, so here's what I don't like. I don't like what I severely dislike is not having options, and I don't mean options in the financial markets way. I like having the ability to change and shift with the wind, if you will. Perhaps not
Hmm.
that often. Okay. And to that point, so I'm all for owning physical gold and silver, and I do, but I will not go hugely into it simply or maybe as big as some people do. Maybe that's the way to put it. Simply because I don't have the option to easily divest myself of that position. Does that make sense? Because
Divest yourself of a physical gold and silver position. Is that what you're
so
saying?
let's say that was the only way to do a physical. Let's say there were no ETFs. Okay.
Hmm.
I don't have the ability to say, you know what, this has gone meme stock. I've seen this game before, right?
Hmm.
I want to get rid of some of this. Well, that's not
Hmm.
an easy thing to do with that. Conversely, I had been selling my gold and silver ETFs into this rally. I had sold some here and there and realized those gains. So it's two different vehicles for two different things. So maybe a better way to put this is, let's just say 10% of your net worth is in, you've gone out and bought the physical gold for that and it's sitting in the gun safe. But now it starts taking off and doing well. And you're like, well, I buy that. I'm not committed. You can go sell it, but it's a pain. You're going to pay out the premiums to the coin dealers and all those things, right? But I can just go on and go clickety clack on my computer, and in my investment accounts, which are tax advantage, I can go ahead and buy more. So it's a way to kind of get a little bit of the froth into my account, if you will, when these run ups happen, because the emotions. I mean, you look at a silver chart. I mean, it's gone. I mean, it went crazy. We all know that, right?
Hmm.
So this is a way on the way up on that to take a little froth off the market and put it in your account.
Yeah. So I think God put us together for a reason, you know, because of our different ways of looking at this. And when silver was going parabolic, I didn't, it didn't mean anything to me. And as it went down, it didn't mean anything to me, because it's only going to go one way.
Mm-hmm. I agree.
It's only going a long enough time horizon. It's only going one direction. So, um, because of the place we put ourselves in, and we can go down, we can enumerate why. I mean,
Mm-hmm.
we have swung this giant swift bat and clubbed people over the head with Daddy USA and the
Mm-hmm.
petrodollar, and we've been really reckless, and it's time to freaking pay up. Whether that's now or 5 years from now. But I don't know that at the end of the day, Warsha's going to be able to do anything exciting to get us in the right direction. I mean, hell, when you've got tariffs bringing in the kind of money they're bringing in, it's like we're going to give a tariff rebate. It's like, guys,
Yeah.
what are we doing here? What in God's name are we doing?
Well, in fairness, they're doing the only thing they can because
Right?
the debt's unpayable.
I
So
know,
you might as well look at the next election cycle.
but we're just kicking the can down the road.
Mhm. Yeah.
You know,
Yep. So
and
play the game that's in front of you. I mean,
I
that's
guess
what you got to
so.
do. I mean, that's what it is. And so then there's the varying timelines of that.
It's a
I
dangerous
wouldn't.
game because as the denarius was getting eroded by Nero and others, what happened? Well, the soldiers got pissed off because they're out in the frontier and they realize, nobody's wanting to take the denarius because they realize it's, just a piece of copper with some silver foil wrapped over it.
Mhm.
And they're getting pissed off. And eventually they start, there's civil wars, and then they're killing emperors. That's our future.
Mhm.
You know what I mean? I mean, it just really is.
Yep.
Whether it's now, whenever. What does Project 1868 say?
Says physical gold is like ammo. You can only carry so much, and if you leave it at home, and if you leave it at home and you bug out, then it's not worth anything. And you're absolutely right. Couldn't disagree with that if I wanted to, and I don't want to. Okay, but again, it's also a store of value, just like in a real end of the world scenario. So is ammo. I mean, you go to certain parts of the world, and ammo is used as a currency of a sort, right, in a barter society. So
I bought thousands and thousands of rounds of ammo yesterday for this very reason, as a flight to assets, and
you
just
did put
keep
my address
stocking
on
it.
the shipping part of that, right?
I mean, it's dirt cheap right now. I
Yeah,
mean,
it
it's
is. Oh
you
yeah,
know,
it absolutely is. Yeah, I bought. Some of you are going to cringe when I say this, but I practice with steel case ammo. 'Cause I don't have time to reload anymore with everything, so it's cheaper to just buy an extra barrel, and when it wears out, or the extractor. And I do my own gunsmithing, so I don't care if I tear up an extractor or an ejector. I just have spare parts sitting in the bins upstairs,
Mm-hmm.
and I just swap them out. And plus, range cleanup is a lot easier with a magnet.
Ah,
So
good point.
not to mention, I for years I shot brass ammo. I probably got 75,000 rounds of or 75,000 pieces of brass upstairs. I don't have time to reload as it is, so the steel's cheaper, easier cleanup, and if the world goes to hell in a handbasket, I've got all the components to build up ammo. So
Michael says, "Is this the road episode? Join late catching up."
yes,
No, but
absolutely.
I will maybe a little bit, but I do want to add on. Maybe I'll put some stuff together for next week because it speaks
Mhm.
to what the gentleman over there, Project 1868, says. My strategy is bug in. Where are you
Mine
going to go?
too.
I mean,
Yep.
where the hell are you going to go? And I'm not
Yep.
asking him. I'm just, being rhetorical. Where are you going to go? I mean,
Yep.
I have created a very defendable, I don't want to say oasis, but I mean, I don't know that many people have the setup that we have had here. Um, so I'm not leaving with it. Now, that creates another set of problems, which is what I want to talk about next week, and that is the partisan conflict that when these kind of things start tearing themselves apart, that you're going to see. And so I think if you will permit me next week, Will, I'll do
Yeah.
a few slides on how to survive in that environment, and we're going to look at what happened here on the Cumberland Plateau during the 1860s with the people like Champ Ferguson and some other Tinker Dave and some of these other partisans that just would ride up and hey, I heard you were talking to so and so yesterday, and they'd shoot your ass, hang you from a tree, whatever. So how do you, if your plan is to bug in, how do you treat that when people start showing up on four
Mhm.
wheelers, in
Yeah.
today's age, like, hey,
Right.
got a problem there, Rich? What are you doing?
Yeah. All right. So I want to touch on Don's comment here. Can you read that one off for us? And I have a couple thoughts and something I just put together based on that comment. So thank you, Don.
Don says, I see silver as one of two vehicles. It's either an investment or insurance. If it's an investment, then the market pricing matters because you're trying to time the market and buy low, sell high. You're wanting to grab profits. If it's insurance, it's for times of economic uncertainty. It's a possible barter item or alternative currency. In that case, the ongoing market process doesn't matter. You've got it for rainy day and I'm the insurance end, and I think you play a little bit of both with
Yep.
your insurance as well as investment, correct?
All right. So I'm going to challenge you to think about something.
Ooh,
Ooh. Okay. So
challenge.
we watched silver go parabolic here, meme stock, all that stuff. Let's just say I'm just going to make up a number. Let's say it pulls back to that. I'm going to pull this up real quick. All right. Help a guy with an Illinois public school education. Can you add that slide back in that I
The silver one?
yeah, that one. Okay, let's just say we're just spitballing here, guys. This is how I learn / teach myself stuff. Let's say silver does that big pullback to the green line there, the 200-day moving average, a 41% drop from here. So it's going to go down to 40 something. It breaks the
Mm-hmm.
previous high of 50 from 2011, does all those things. Great buying opportunity, right, brother?
Yeah,
Absolutely.
I'm in.
So you buy some some physical. I buy some physical. I buy some SLF, the ETF for this, in a
Mm-hmm.
brokerage account. In other words, it's not tied up in an IRA where I can't get the money out. Let's say it runs back up to let's say it runs to 80 to make my math easy here. It doubles, right?
Mm-hmm.
Now, when I sell that SLV, I'm going to have to pay taxes on it. I know that. Let's just set that aside for a minute for easy math.
Mm-hmm.
At that point, when it memes out again, I go, and then I take my profit off of that and I
Mm-hmm.
go buy physical and I
Yep.
play with house money. So it's a way to play
Brilliant.
both ends on it, right?
Mm-hmm.
And I'm also limiting potential future downside since this is extra, if you will, when I buy it down there. If it goes down another 10%, I can wash my hands of it and walk away from that position. It's got me
Yep.
thinking. Thanks, Don. Appreciate it.
No, that's exactly the way you should do it. I mean, that's brilliant. I mean, that is the way to do it. And I think every time you say meme stock, I cringe because I don't think it's I don't think it's the right way to. I don't think. I mean, to call silver or gold a meme stock is to me hilarious. It's been a medium of it's been a medium of exchange for thousands and thousands of years, and it will be long after you and I have shuffled off this mortal coil. It's and as to why it went parabolic, we talked about this too a couple weeks ago.
Mm-hmm.
When you have Goldman, JP, whoever was doing it, manipulating the silver market, that's why. Well, it hasn't done anything since 2011. Well, it hasn't done anything because they've had their hand on it.
Mm-hmm.
They had their hand on it, manipulating the market. They got caught. They got fined. They let their hands off, and it went straight to the top. Now,
okay, good. Sorry.
And if Warsh hadn't come in, we would probably still see it edging up. Now, would it be going parabolic still? I don't know, but I think that no one reading what I have read about this man and what he, his past, I could see why people the silver market corrected a bit. But at the end of the day, it's a strategic metal. It's not going anywhere, unless we're out here rubbing two sticks together and we don't have AI and we don't have all these things in the future. No cell phones anymore, no advanced avionics, no bombs and bullets and Band-Aids. It ain't going nowhere. I don't think it's a meme stock at all.
Okay. So for clarification, I'm not calling gold and silver a meme stock, but if you look at their chart, it's gone meme stock. Look at the chart and let me replace that with.
Yeah, but this isn't GameStop, man.
Well, it isn't, but if you look at the chart, it is. And at the end of the day, it doesn't matter if it's gold, silver, NVIDIA, or GameStop, human emotion runs the market. And when it goes parabolic like that, there's going to be enough people that go, I'm going to short this now. There's all these things that will play into it. And there will be, especially in commodity stuff, there will be at some point a reversion to the mean, the long-term average. Now, does that mean these outside forces can't force that long-term average higher? Absolutely it can. It has. No two ways about it, right? But in the short run, that chart looks, I mean, it's down 30% in a day and still up 15% in a month. That's not a stable asset.
No, right? It's not a stable asset any more than Bitcoin is a stable asset. This is a volatile,
right?
But at least one has, I can take that silver and put it into a bomb and blow somebody up with it, or build a computer or whatever. I can't do anything with the freaking Bitcoin.
Agreed.
So.
But in the end, this is where you and I look at it differently. I don't care what it is.
Yeah.
You can call it ABC. If enough people are buying it and the price goes up, I want a piece of it.
Yeah.
Now,
in the 1740s, you would be buying tulips.
Exactly. Yep. And I'd be trying to get the heck out before, because I would have known it was as big a scam as we know other things are, right? But hey, you got to find the greater fool out there, right?
Mm-hmm.
So that's just the way it is. And let's go ahead and go into, I see you've got some slides there. Can we jump? Let's do yours, because I want to talk about Kevin Warsh a little bit, because it's on one of my slides as well.
Okay, this is something to kind of get people right out of the gate, get the emotion going. But Brian says, to Rich's point, ammunition is a requirement for defense of our community. It's also a potential barter economy. I mean, remember in 2020, a box of 9mm, 115 grain was $50 if you could find it.
Mm-hmm.
So why are we as a gun community not? You can get it for $10 a box now. So we know it has.
Why.
Huh?
I can tell you exactly why.
Why?
It's the same reason it got off my radar for a while as well. Complacency.
Yeah, that's it.
Things have gone back to normal.
Yep.
It's never going to change, right? And you're being proactive, and that's awesome, right? And I bought a bunch of 9mm steel case, right? For my practice stuff. That was more of a practical budgetary thing, right?
Mm-hmm.
But we watched the same thing in 2016. Everything went crazy before that because Hillary was going to win, and then when Trump won, all the AR manufacturers were like, we got a lot of inventory and now nobody cares.
Right. That's exactly right. I mean, right now, gun prices are as low as they've ever been in my life. We're talking about early 90s pre-ban freaking gun prices, which is insane. And the technology is so much better now. So again, I mean, maybe not advice. He'll get a crate of AR-15s and throw them in the barn or something like that. They might come handy someday.
Well, and to that point, so we can look at something like that, and this could be, whether it be ARs or what have you. If what you're talking about, the continuing devaluation of the dollar over time and all these things, every commodity goes up in value. I don't care if that's steel, won't be as much steel because it's not rare, right?
Mm-hmm.
But every commodity goes up in price over time when the currency devalues. So what happens to the
Correct.
value of an AR over a long enough time frame? Goes up. Let's think about old
Yep.
Otto, what's his name, in Weimar, Germany. He saw what was happening. He went out, used up all of his cash, and borrowed everything he could get to buy commodities.
Yep.
And then his kids didn't understand that and threw it away.
I'm telling you guys, it's a it's a math problem at some point. Now,
Yep.
to Michael's part, he says, Will frames the perspective of investing. Are you talking the short term or long term position? Yeah, and you play both ends against the middle, and it
Mhm.
makes you, makes you very successful. I'm just a long term guy.
Yep.
I got other things. I'm not doing that. I should do it, and hopefully that as you teach us more about options, I've told my bride we're looking at getting into that market because I think it's I don't want to say can't lose, but if you do it right, I think there's a very little downside.
You play the what I like about the options is you're playing the odds,
Yeah.
and you can measure those odds.
Yeah. Jeff says, and he reminds us, Virginia should be a wake up call.
Yes,
Virginia,
absolutely.
for God's sake, sliding into the abyss. Now, New York was
Mhm.
always a thing that was going to happen there, but
Yep.
for Virginia, and you got this small little blue enclaves, these little counties that are running
Mhm.
roughshod over southwest Virginia that is all red.
Yep. Well, see, also Illinois, been like
Yeah.
that forever. Chicago runs the whole state, and the whole rest of the state is, I mean, it's quite red.
Yeah, very, very.
And very gerrymandered too, for the record. I see Mark's on from Australia. Good to see you, brother.
Good to see you. Jeff reminds us, get out and get involved in your small community
Yes.
politics. The brewery across the street from where I live, they're having a Republican ladies' night tonight. So, and that's the thing, man. As I go over there on the weekends, my brother and I and our families, and we kind of, especially during the spring and summer months, and we kind of sit outside, and there's all these Yankees that have moved down here, and they're out there talking in their golf shirts and stuff, and hear the stuff they're saying. It's like, oh boy.
Yeah.
So these conversations are being had. It reminds me of the conversations that the Sons of Liberty were probably having prior to that. So, real quick,
what you got here, brother?
Oh man, real quick. I can't believe they arrested Don Lemon. Well, here you go. When you lawfare, but works both ways, guys. And if you play that game, that's what you're going to get.
That's it. Yep.
And a little thing here, stop the fascist. It's like Jesus Christ, these freaking people.
Yeah,
that's all I had. Just a little get you going there.
Yep. I know it's it's very true, right? I mean, it's the I'm going to call it the hypocrisy of the left. I mean, they'll go on and protest both sides of a given issue, and it's annoying. So we'll see. Also seeing, Trump made an offhanded comment at one point about, I think the fraud's bad in Minnesota. Wait till we get to California. And I forget, I can't stand behind the source, guys. It was on Twitter. The report, gosh, what was it? Something like 2,000 hospice agencies, offices in Los Angeles County getting federal dollars to the tune of however much in the size of that county. Also read a report from a much more credible source. Suddenly landlords in the Los Angeles area are dropping rents because there's suddenly not enough renters for some reason.
Weird.
And so it's driving the rental market prices to go down. So, it'll be interesting to see how this shakes out, because I also saw a chart of, and this was from either CNN or Fox, I can't remember which one, talking about deportation numbers out of states other than Minnesota. And no riots. You're talking about Florida, Texas, I think Tennessee was thrown in there. So it's just wherever they could gin up the resistance for it, which I'm sure was just a coincidence that was right after the whole child care leering thing got figured out.
Coincidence, buddy. Come on.
Oh, you're right. Oh gosh, me and my conspiracy theories. So, all right. So let's talk about Warsh real quick. First, he was the dark horse. Nobody expected him. I didn't. I expected either Christopher Waller who was is currently on the Fed. He's currently a Fed governor. Very dovish guy. Waller is.
Mhm.
Or Rick Reeder was kind of the he was thought of as the more likely person among certain circles. BlackRock guy, kind of like Trump, always print money, always lower rates, cheerleader sort of guy. So when Warsh hit on Friday, when Trump announced that I don't know if that really drove the silver and gold markets down, or if that was the excuse for the manipulation to occur.
Hmm.
Don't know. Okay, there's a lot of reports out there from sources saying J.P. Morgan did this because when I say did this, I'm talking, drove the silver market down through manipulation to get themselves out of a bunch of positions. And they were margin calling other big banks like HSBC and driving that price down. JP Morgan, according to these reports, liquidates their position and steps aside. We'll see. It'll all come out in time. At the end of the day, it is what it is, right? I mean, you got to play the game that's in front of you, and screaming into the wind doesn't change anything. So back to Warsh. I watched this interview with him. I encourage everyone to go watch it. This is off YouTube. If you just do inflation as a choice, Kevin Warsh, I'm sure it'll come up. About an hour interview. The guy is level-headed.
How long ago did that interview come out?
About 6 months ago.
Okay, perfect.
Which means this was 6 months ago. He was still in the interview phase. They were all.
He was a governor, right? He was a Fed governor, wasn't he?
He was during the GFC.
Yeah.
So here's the knock on him, if you will. You remember when the Federal Reserve raised rates, causing a really bad recession to become the Great Depression? That's what he was. He was advocating for raising rates in the throes of the housing crisis because he was more worried about inflation coming back. And at first I thought, geez, does this guy not know history? I mean, which type of stupid is this guy?
Mm.
And then I got thinking about it. And it's like, hold on a second. Was he stupid, or was he actually following the mandate of the Fed? The mandate of the Fed is full employment and stable prices.
Mm-hmm.
Right? Well,
yep.
was he just doing what the book said to do instead of playing the political game? I don't know. But watch that interview, guys. It's an hour long. Now it is a little bit of a softball interview. It's at the Hoover Institute, which is from Stanford, and he taught there. He went to school there as well, so it's a little softballish. So keep that in mind as well.
His wife's a billionaire too.
Yeah, Estee Lauder family, right?
That's right.
And they're drawing the connections between that and the Trump family. I look at that as, I mean, kind of like you and I were talking about before the show. In aviation, kind of everybody knows everybody. In the Marine Corps, once you've been there a certain amount of time, everybody knows everybody. I'm guessing the same thing in New York City. Once you get to the upper echelons of the money side of the city, everybody knows everybody.
Absolutely.
And then when they hang out, their kids get married. So yes, it's a legit thing, but I'm not, I don't
either.
Yeah, so I don't put too much credence in that. I mean, this isn't medieval Europe where we marry the prince and the princess across places to, solidify a peace agreement. I don't buy it. So the thing with Warsh is, we'll see. Is he going to stick with what he said previously, or did he tell Trump, "Yeah, I got you"? Don't know. We'll find out. Now, I have it. Now, this is an out there theory, okay? And I'm very interested to hear what you and some other people have out there. Okay?
Here we go.
I almost need to track down my tinfoil hat for this one.
We got to bring that thing back.
Okay, so we need lower rates, right? Because the government debt is unserviceable at the current levels of combination of debt level and interest rates, right? So we need lower rates. Trump's first term, all he talked about was the stock market, right? He came out and said at the start of this term, don't judge me by the stock market, judge me by the 10-year bond, the yield on it, the interest rate on that, right? So Warsh is a sound money guy, okay? If he starts tightening this down, okay, put aside the economy for a moment. Just look at this purely as a fiscal thing, monetary thing, I guess I should say. So he tightens this down, refuses to help fund congressional overspending. That's going to strengthen the credit rating, if you will, of the United States government. When that happens, that drives demand for our debt because there's a better chance of getting repaid. Our debt is the bonds. When more people buy the bonds, it drives up the price of the bond, which therefore lowers the rate. And we can like it, not like it, whatever. The 10-year bond, the yield on the 10-year bond runs the entire world. Whatever that, everything else keys off of that. Okay. Is your corporate bond paying a good rate or a bad rate? We compare it to the 10-year US Treasury. Okay. What's your mortgage rate? Runs off the 10-year Treasury, not the 30-year. Even though you get you a 30-year mortgage, it runs off the 10-year rate. If he drives that 10-year rate down, that drives down the 30-year. It drives down the short end of the curve, which if he raises or lowers rates on the short end through the Fed funds rate, that affects the 10-year. All these things matter. Now, this is a longer game if all this is the case. Okay.
Mm-hmm.
So this would be a long-term refinance the government debt at lower rates. Because let's not forget, Yellen, for all the fancy letters behind her name, is a stone-cold idiot.
Correct.
During COVID, when rates were zero and people were happy to just have the return of capital instead of return on capital, U.S. Treasuries were paying basically zero on the short end, 2 years, and what, a point, something like that. Somebody can look it up if they're interested, on the 10-year. What did she do? She financed everything on the short end, 2-year and 5-year. People were screaming in the financial community, issue more 30-year bonds, lock in this 1.5% rate or whatever it is on the debt for 30 years. There was a push to put 50-year bonds out there. You probably could have locked those in for 2.5, whatever, right? She did everything on the short end of the curve. My tinfoil hat says she was setting up whoever came after Biden. And if it was Team Blue, they would find a way to, cure that problem then. But if it's Trump, now he's set up suddenly doing this. This is also why Trump is refinancing more of the debt on the short end, 2-year and 5-year, so he can refinance it after that period of time, right? So if Warsh is able to run rates down through the proper way of doing it, because if he just lowers rates right now, inflation is going to take off, which is going to require much higher rates later, because we're going to start putting inflation into everybody's mind, right? We're going to lock that in. So we really can't, if inflation takes off again, we're going to have big problems. Okay. But if he's able to go to sound money and drive rates down through sound monetary policy over a period of time and signaling and talking tough and all these things, the national debt can get refinanced at much lower rates. So the question is Trump playing, as his people like to say, his fans like to say, is he playing 3D chess while everybody else is playing checkers? The answer is I don't know. Okay. But this is a theory I kind of came up with driving along.
The only thing I would say is, as you said, all that is, it depends on who's buying the bonds. If the Fed is showing up and buying all the bonds, then all we're doing is continuing the death spiral.
Yep.
And I think that if some of the things I read about Warsh over the weekend was, he understood, he's terrified of inflation, the way that I read it, right?
Yes, I agree.
And he realized a lot of the things that we did were not good in that regard. So I think he's speaking my language if he's worried about inflation, because he should be. We're never going to go through a Great Depression again. We have the tools to fix that.
Agreed.
However, we have no tool to stop inflation. Very little tools once it gets going. And I think we did a lot of damage to our moral standing in the world, and we continue to do damage to our moral standing in the world, and we continue to do damage to the US dollar with the way we're so recklessly clubbing people over the head with it. So
agreed, all the way around.
He has a big job ahead of him, I guess is what I'm saying.
He does. And if we lose control of inflation again, that'll probably be it.
Yeah.
And when I say lose control, I don't mean it goes from wherever they're saying it is now 2.5-ish up to 3.5 or 4. I'm talking we breach 5, especially, and anything much higher. then you're going to see a bigger push for a BRICS currency, something more stable, right?
Yeah.
So he's, like you say, he's got a big job in front of him, and you're going to hear a lot of screaming from the political class on both sides who want to get reelected. Money's too tight. I can't give it away, right?
And what I remind everybody, well, what are central banks? What have they been gobbling up recently? Not just here in the U.S., but around the world.
Oh, funny you mentioned. Let's go back to the slide deck.
Okay, let's see here.
Go to the next one. I think it
Okay.
starts with the next one. Now that was the chart we jumped to, so we can go past that one. We talked that one out. That's the silver one.
Okay.
Go to the next one. We'll bounce back to these.
Yeah, there we go.
Yep, exactly right. Central bank net gold purchases. So each the bars are the, pardon the pun, the bars are how much gold central banks bought. And this worldwide central bank net purchases since January 22 by quarter. The line there going upward, which I couldn't get to change colors. Sorry, guys. That is their total gold inventory.
Huh.
So the bar chart is how much they bought that quarter. The line is their total inventory. Okay.
So they're buying it, holding it.
They're buying it and holding it.
Does that look like something that would, what people would do if they really had nothing but faith in the dollar? And I guarantee you would see an inverse relationship to their purchasing bonds.
Okay. All right. So
I'm guessing.
Yeah, and I'm guessing you're right. I haven't looked at that, but we know there's fewer in the big picture, fewer U.S. bonds being bought. But I'm gonna. You didn't go quite where I thought you were going, but let's bring that chart back up.
Sure.
And let's examine your comment for just a second here. So you said, as it's going up like that, you see them buying bonds. Well, that's another way of saying trading it for cash, right?
Mm-hmm.
So what you're saying is and this is just for perspective, right? So what you're saying is when you buy physical metals, you're also tying yourself in for the long term versus our discussion earlier about long term versus short term. In other words, they can't go get the cash and use it for other things. They're making a long term commitment.
Yeah, it's a flight from cash, not to it.
Exactly.
Yep.
So, and then this also, we can get into the whole, the Ukraine thing with using SWIFT as a weapon that you alluded to earlier. They're looking to divest themselves from pressure from the United States government.
Yeah. Yeah. And what is that? Does that bode well for the U.S. dollar in our $38 trillion of debt? Hell no. Which is why I say on long enough horizon, the blip that silver did on Friday, the little burp it did is not, doesn't mean anything to me.
Yeah. And along the timeline, I agree with you.
Yeah. What does Michael say?
Energy costs and rates are the 1-2 punch that drives inflation. Absolutely right.
Yeah.
Okay. Now let's the energy one reminds me of an article I read over the weekend. Trump came out and told India, you will very soon be able to buy Venezuelan oil. That gets them away from Russian oil, which we've looked the other way on them buying sanctioned oil.
Yes, we have.
Because we need to keep India on our side because they have the world's largest working age population.
And unlike China, they're going this way in their demographics.
So that's why we play nice. That's why we take their side over China on the border skirmish and them over Pakistan and their stuff. Yeah, it's a bigger game there. So, So you're Michael's absolutely right with that. If you go to the next chart, I think I had something else.
And to Michael's point, it's not obviously not just here in the U.S. You look at what the EU has done, the stupidest things in the world. It is insane.
They have sealed their fate.
They have totally what the hell are you doing? And that could be a show all in and of itself. If you're one of the 16 folks watching going, what are they talking about? We've talked about around it many times. Go check that out. It's
And there's the demographic side of Europe. Also, they've just cut their own throats with energy over there, which is why they're so far behind on the AI game. They can't come back from it. They can't get the energy fast enough for the AI game. Okay, so you will notice here, this is our chart from the previous page in the upper part. with the central banks buying gold. And here's your meme stock chart of gold. Just trying to, just trying to get your heart rate up there, brother.
Take care, guys.
You took your blood pressure medication this morning, right?
Yeah, I did.
All right. That's always a good thing before you talk to me about this stuff. But so you're seeing an underlying demand. So here's that, but you'll notice what's one thing central banks are not buying much of? Silver. They're buying gold.
Mm-hmm.
Okay. Because let's face it, silver is volatile.
Yeah.
Okay. Compared to gold. Okay.
Always has been.
Always has been, always will be. Okay. This is also there's an industrial case for silver, and that's why it's manipulated, is because of the industrial case. Okay.
Mm-hmm.
Now, here's my take on gold prices, maybe a little bit of silver too, because of the electrification of everything, but specifically gold. The central banks are putting a floor under gold.
Yes.
Because gold is currently, let me see here, down 4% on the day, down to 4,700. Well, it was what, 5,300? Whatever it got to, right?
Yep.
53, 54, whatever it was. Okay. So it's down, what, 8%? You think that might get them to buy some more and create some demand out there?
Absolutely.
Put a floor underneath that? Are they coming in and buying silver like that?
No, but I think that I don't look at, gold to me as a monetary metal, whereas silver, like you said, is an industrial strategic metal. And I'm not, it's not my opinion. It's a strategic metal. Last fall, quietly, the U.S. changed it to a strategic metal. Now, they didn't do that for no reason. So,
All right, so I'm going to throw one other one out there for you, and I know you say I know you watched it. There's a guy named Luke Groman, and later on here I will find the interview and put it up here. I'll throw another image up here for you guys. He is
that was a fantastic interview, by the way.
Thank you. I'm glad you enjoyed it. I've watched it 3 times now. It's about an hour. He is a level-headed, if you will, sober commentator on things. When I've gotten myself worked up about stuff, I watch one of his interviews and I'm like, what? No, come on. He's very, very even-keeled guy. Okay. And he makes the argument in his video, and it's in the title, so I'm not giving anything away, but please watch the whole thing. Is NATO buying up all this silver to build weapons, to whether that be electrification of everything or anything else? So then, a person's got to ask themselves, does that go against what I just said, where central banks are putting a floor underneath silver? Are these individual countries putting a floor under silver at some point? Because they need it for the bombs, they need it for the electrification of everything. As we talked about previously, Samsung just bought out an entire silver mining company's
20 years
future production for years at 80 an ounce.
Yeah.
Okay. So
that tells you what they think.
That's exactly right. So now, in fairness, before we get too excited about that, I guarantee Samsung also went out and hedged that by buying some puts on silver for somewhere underneath that.
Stupid
right?
if they did.
Absolutely. So, when the silver / precious metal unreasonable bugs, okay, will be like, see, Samsung did this. It's like, okay, yeah, that's part of it. But I would be willing to bet a large sum of money they also went out and hedged that contract. And they probably have circuit breakers to get out of that contract as well. Or they will just get out of the contract and let this mining company sue them, and they'll, play that game. Okay. Because that's what lawyers are for. But point being that the electrification of everything is going to put some sort of floor under silver. Is it at X price, Y price? I don't know. See also copper chart. That's another.
Oh my God.
That's another meme chart right there. See.
Oh, Jesus.
I'm just getting my Monday morning entertainment in here.
There are Roman senators rolling over in their graves right now. Like, what did he just say? He called copper a meme stuff. I mean, jeez, Will.
I'm just.
You found you're poking the bear this morning, buddy.
Yeah, I did. You know what? And I got to tell you, it's a lot of fun too. And in fairness, though, honestly, of all these, I didn't realize this. Let me get back to a different chart here. If I was going to buy something right now today, it'd be, if I was going to buy something in the precious metal space today, it'd be copper. It's up, but it did not go parabolic like silver or gold did. So
I saw it. It was up to $6 a pound, I think, last week. What
it
is
is.
right
I'm
now?
looking at the ETF right here, which doesn't. It's my perception is that it does not follow the ETF on that one. Doesn't seem to follow the base metal as much. Actually, it's pretty darn close. Now, I'm going to take that back. It's pretty close.
Yeah.
But see, it's down 2% pre-market ish, something like that. So we'll see how it shakes out, and we just got a couple minutes here till the market opens. They start trading real money, and we'll see what happens. But the point is, if central banks are putting a floor under gold, are governments and industry putting a floor under silver?
But they're not putting a floor under the dollar, bro. You're
right.
You know what I'm saying? You can't. So
yep.
And they're probably, I don't know if it's in their best interest to put a ceiling on the dollar too. Not that they could, but I don't know.
It'll depend. So if we're going to go way out there on the what if game, there comes a point in time on a personal side where it's like, you know what, my business gone insolvent, there's this, there's that, and I've got $50,000 worth of credit limit left on my credit cards. Go for broke. Let's just go spend it all. I got to declare bankruptcy anyway, so might as well just go all in, right? Will there come that point for the US dollar? Yeah, probably. At some point. Will it be in our lifetimes? Not sure. We'll see. We got to see how this whole fourth turning shakes out, right? So
Michael says there's an untapped copper supply with the U.S. ending penny production. Yeah.
True.
Pennies
Absolutely.
anymore.
Yep. So, and we've seen this.
Not that there was much copper in them recently. It was mostly zinc, I think. But
yeah, and we've seen this game before. A friend of mine just bought a house to turn into a rental, and had to go back and redo some wiring because they found aluminum wiring from the 70s.
Ooh.
Because in the 70s, when commodities took off, they started using aluminum wiring, right? So we've seen this play out before, and then what happened? The dollar got strengthened, different times, but it rhymes, right? The dollar strengthened and commodities collapsed. So
copper was a meme back in the 70s, huh?
That's right. Yeah, sure was. So was gold and silver too. I'm gonna get you your own little paddles there to shock yourself. No, I don't hate you, brother. So, all right. So one thing I want to talk about here real quick is people are, stock market's gonna crash. Okay, well, yes, eventually, right?
Yep.
So the saying I really like over here in the red is bull markets do not die of old age. Oh gosh, it's been 4.5 years of a bull market. Time to stop. No, there's always some sort of other catalyst that causes the start of a crash or a big downturn in the stock market. And that
Don't you think some of those are healthy? I mean, honestly.
Oh, absolutely. Yeah. When it runs too far, then it's a health restoring event.
It's painful, but my God, you got to.
Overall, as a market, it's a health restoring event. That's hard to see at times when you're watching your account balance go down if you're not really taking care of it. Okay. Yep. But the bottom part of it in red here, I'm stealing from, I think it was Ray Dalio. It might have been Larry Fink. I can't remember which one did an interview, and they said that ultimately bull markets die from a need for liquidity, need for cash. So let's talk about that real quick. So let's say you had 50% silver, okay, and 50% stocks, and you had gone in on margin on both. Okay, let's just say. Okay, I know because that's how you play the game, brother. I know you talk up a good game about this other stuff, but I know that's what you do. Okay, but let's say you did that, and you were out there on margin on both of those, and then Friday happens and silver goes down 30%. You get margin called, right? Well, selling your silver doesn't do too much good because you still have money borrowed. So now you got to sell stocks, right? And then so there was a need for liquidity, so you started indiscriminately selling other assets to take care of this problem, that silver going down and getting margin called, right? So my theory is that yes, markets do not crash or correct because of overvaluation. In other words, they've gone up too far for the amount of money that XYZ stock is producing in profits, right?
Mhm.
There has to be some sort of a catalyst to start that crash. Okay. Housing crisis was people stopped paying their mortgages, right? There was a catalyst there, right?
Yep.
Which ties back to the whole employment picture, right? Now, here's the part that matters with valuations. And valuations is just how rich is the stock price compared to how much money they're making. Okay. So if you have a company making a dollar per share in profit, but their stock is $10 above that, well, that'd be overvalued. What if it's 40 over?
Yeah.
Right? That's overvaluation. Okay. So my theory is the duration and or severity of the downturn is related to the overvaluation because, as you said, it's a health restoring event. We have to get those ratios back under control. And eventually the market always takes care of that. It's usually too late and becomes very violent, right? Because it's going to keep going until it stops. And then when it stops, it's going to stop.
Yep.
It doesn't slow down. It just stops. Okay. Also, let's recall if they pump enough money into the system, you can put off any crash because all that liquidity starts looking for someplace to go.
Right.
If it goes back into the stock market, those prices are going to drive up again. So we got to keep that in mind, like we've talked about before. And when they start printing money, large portions of the overall money supply. I mean, COVID should have been a depression when we shut the economy down, right?
That's right.
And what happened after the 30%
papered
down?
over it.
We papered over it and it went up because there was enough liquidity chasing a return. It went into everything and all assets went up, right? Okay.
Yep.
All right. So, Mark asked if corporations doing huge staff layoffs, could that be the trigger? Yes.
Sure.
In fact, that's a really good one to watch because
look at UPS right now
and Amazon, right?
Yeah.
And so here's one for you. So we know that 70% of the US GDP is consumer spending. Okay. The top 10% of consumers, okay, and I can't remember if that was off assets or income. So I'm just going to say the top 10% account for 50%, 50% of spending. So that means 10% of the population is doing 35% of the GDP. Those people, whether that be off income or assets, and I apologize, I can't remember which one it was, guys. But if the stock market goes down 30%, are they going to feel good about going out and spending money? Nope. So I watch what the top 10% is doing very closely for that reason. Okay. All right. So if we're gonna go with my theory that how much a market goes down is based on how overvalued it was. Now it's not a timing thing. This is one thing you'll see out there in financial world goes, oh, it's way overvalued. A crash is coming. Well, no, not yet. There has to be something that brings it on. The overvaluation tells us how far down it could go. Okay. Make sense?
Yep.
See my bottom red line there, brother?
Let me see.
Okay. No, I guess first let's talk about your x-axis on this chart is your S&P 500 annualized dividend yield. So you can look at in the olden days when all stocks paid dividends, you'd look at, okay, I'm making a 2% dividend and I'm paying 10% premium for the stock. Right. So it's a 5X in this simple example. Right. All right. So we can look at on the other side, I got to tilt my head like a dog here. S&P Industrials price to book value ratio. Think of it as it's a valuation ratio. There's many. This is one of them. Okay. So we look at this and go, so if you think about if you got a stock here on this chart, it pays a 16% dividend. Well, you can pay a lot of premium for that stock because you're getting a lot of dividend out of it. Right. Makes sense. But if I'm getting a 1% dividend, let's say, so you're making my math easy. So you get a stock paying 16% dividend and you're paying a $160 premium for that. Well, that's 10X, right? But if I've got a stock paying a 1% dividend and I'm paying the same $160 premium, now I'm paying 160X, right? So the 1% dividend stock is way overvalued, right? Compared to the 16% dividend. So you see the bottom red line there, brother?
I do.
What's the date on that?
September of 1929.
So look how overvalued that market was, and it crashed, what, 70%, 80%? I forget the exact number. Well, let's come on up. Let's look at the other red line. That's 1999. That was pets.com. You want to talk about overvalued? I mean, there was no profit. Period.
Hmm.
Zero, right? Now, start at the bottom there, brother, and look at the years of my yellow boxes.
Ooh,
Look at that overvaluation.
holy smokes.
Yeah, that wasn't smokes was not the word I used when I read this, but it,
Yeah.
it started with holy. Okay, so how
And
much are
this
we going
this is
to?
as of last week. This is
Yeah,
a really current chart. Wow.
yep, absolutely. So, I mean, how much are we going to correct when this corrects? Because it is a when, right? How
Yeah,
much are
yeah.
we going to correct? I mean, if we go back to fair market, are we looking at 50% decline? I mean, you tell me, right? So, and now again, they
But
start
can't they
printing
paper
money.
their way out of this?
Absolutely, they can,
And
but they'll
but
still before they can justify papering. There's got to be some sort of a crash. We didn't paper. We think about COVID because it's near enough for us to really remember. They didn't start printing money until after the crisis was going on. They didn't start like the December before when you and I first started talking about that stuff, right? They didn't start in December or January. It was, I mean, February when they shut it down, right?
mhm, mhm,
And then they didn't really get going on the money printing until March, April. And that pretty much signaled the bottom of the market because there was
mhm.
enough liquidity to bring asset prices back up, right? So we've talked before about that. There's your, if you will, your timing tools, right? So usually when they start lowering interest rates, they being the Fed, when they start lowering interest rates, that signals the top ish of the market. Started lowering rates last year. What's happened to the stock market since then? It went up for a while yet. But now, if I go over here and pull up my handy dandy charts, you can see it's definitely in a topping pattern since it's ground slowly up since the end of October. But I mean,
Mhm.
slowly up. And I mean, I've been looking at stock charts for a long time. That looks like a topping pattern to me. Now,
Yeah.
really tough to paper over that right now because you can cause inflation. They have to let something that at least smells like deflation start to happen before they can justify papering it over. In other words, you got to have an emergency.
Oh God, here we go.
Yep. I mean, once a person studies up on what happens here, it's no different than your relationship between currencies and gold on a long enough time frame, right?
Yeah.
It's like you can see it coming, and um, it gets really tough to talk to most of the population about it. It's not because they're stupid or whatever, but they're believing the narratives that come off Fox and CNN. Oh, it was
Hmm.
Team Red. Oh, it was Team Blue. No, it was Team Green that did
Hmm.
it. It's always Team Green in the end.
So again, as a student of history, we talked about this 6 years ago. People are like, oh, hyperinflation will never happen here. It has happened here during the Confederate dollar.
Mm-hmm.
Went up anywhere between 7,000 and 15,000. There's people that are on both sides of that.
Yep.
And why? Well, it was the first example of fiat currency in the United States was the
Mm-hmm.
Confederate dollar. It was backed
Yep.
by nothing. And there's a whole lot of reasons why, it wasn't just losses on the battlefield that caused the collapse of the currency. They had an embargo on cotton, and cotton was they were an agrarian economy. But where am I going with this? There's a really interesting scene in the movie Cold Mountain
Mm-hmm.
where this girl is. Have you seen that movie, Will?
I have not. No.
Yeah, go watch it.
Okay.
Fantastic movie. And it just shows the horrors of the Civil War on the home front.
Okay.
Fantastic movie. Great cast. Anyway, and it's based loosely on a true story. But there's this one sign where they go up and there's a ferry being operated by a young girl, and they're negotiating a price to get across the creek. And,
Mm-hmm.
she's like, well, Confederate or US dollars? Because if it's Confederate, it's going to cost you $5,000 across the creek. If you got, American money, it's going to cost you fucking $5, pardon my French. And then they're like, yeah, we only have US dollars. She's like, okay. Oh, you got US dollars? Well, for US dollars, we'll go over here on the other side and I'll raise my skirt up. If you got US
Mm-hmm.
dollars, we can do more than just a ferry ride. But that's where people get when the dollar
Mm-hmm.
collapses, which is why
Yep.
I'm a long-term silver gold. Um, and non-believer in fiat currency because we couldn't get paper our way out of September of 1929. But we can now, but it would just hasten the overall destruction of the dollar.
Agreed. Completely. Couldn't agree
Yeah.
more. So I want to touch on Mark's point here real quick. His
This
latest
one,
one. Yeah,
post
what's he say
grease.
there? Yeah.
Post grease. Let's see here. I'll click something and my screen went away. Okay. Post grease. The post grease bail ends. Is it wise to have cash in banks at all?
Okay, so let's talk about what is a bail in, and that's when banks take your deposit, your savings account, your checking account, and bail it into the bank versus a bailout from the government, and take that to make themselves solvent. And if you read your regulations, your banking regulations right now, and on page 57 of your agreement with your bank, guess what they can do, brother?
Oh yeah, 100%.
Your deposit is their asset. So, to that point, that is not the case to the best of my knowledge, and I stand by to be corrected on this. That is not the case with brokerage accounts. So you can have. I use Fidelity personally. It's a Chevy versus Ford thing. They all suck on some level, no matter which one you pick. And the only reason I use Fidelity, guys, is I started with them way back, and it's easy because it's the same password, and I'm old and lazy. Okay, I keep a separate brokerage account. Just put a money market account in there, and then if I need it, I go clickety click and transfer that to my bank, and then spend it on whatever I'm spending it on for car parts that I don't tell my bride about.
Yeah.
Not that I
Again,
just said that out loud. Okay.
even if you just look at fractional reserve banking, they don't have all your money.
Yeah.
They just don't.
So to your point, is it is it wise to have cash at all? You have to have some in there. I mean, you got the bills to pay every month.
And you have to have some at home too.
Exactly. So, is it wise at some level? Yes, because you have to have that personal liquidity to operate each month. Does it become unwise at some level? Yes, in my opinion.
Now, as far as cash at home, the way I do it is it's denominated in very smaller bills. And then, obviously there's some bigger bills in there, but a lot of it is the smaller bills because again, why am I keeping it at home? Well, for cases like things get really bad. What does Jeff say here?
Just found a local general co-op that takes gold and silver as currency and gives back change in gold and silver.
That's right.
Interesting times
In
indeed.
Sparta.
Matter of fact, is it
Sparta, Tennessee.
Florida or Texas that you can pay your property taxes in gold coins?
In
gold? It's one of them. I'm going to say Texas, but it is one of them. And I believe they made a change to the state constitution for that.
And I read recently if you're buying gold American Eagles and buffaloes, if whatever money you make on those doesn't get taxed. Have you heard that?
Oh, really? I have not. No.
But if it's like I've got some Britannia gold, which is England, you get screwed. So I wish I'd have known that before.
Yeah. Well, you can always go down to like a coin show, something like that. Might find somebody who wants to trade.
True.
Probably supposed to report that on your taxes. I'm just throwing that out there.
Yeah. Thank you.
Yeah, no problem. All right, so let's get into our next segment here on options. So a covered call. Okay, so we're going to break this out over this part's going to get broken out over a couple of shows here because trying to keep this in bite-sized chunks. Okay, and I want to throw this out there. If I deal with this every day, guys, I'm going to do a bunch of these today, so I'm throwing this out to all of you, but especially you, Rich. If I start running fast on this, stop me. Because this is intuitive to me at this point. And it's easy for me to start talking fast and blowing through stuff. So, through the internet, whack me upside the head if I start doing that. All right. So we talked last week about what is a call, right? It's an option to buy something, but not an obligation. Something being a stock, in this case, at a future date, future price, right? And we pay a premium to purchase that option, right? So now we're going to talk about what is a covered call. Now there's two. I'm going to skip around here, guys, a little bit. I'm let me stay in order here. So covered equals you own the underlying stock. So Well, remember from last week that one options contract equals 100 shares of stock. Okay.
Okay.
So if I'm going to sell one option contract on my NVIDIA shares, I need to own at least 100 shares of that. Okay. I can own more, but I can't own less. If I own 250 shares, I can sell one option contract or two, but I cannot sell three. Okay. So this is a very conservative thing. This is so conservative that you don't have to have a margin account for this. Okay. So this is the very beginning, if you will, the very beginning of options trading. It's very conservative, doesn't take any special. If you're on Fidelity, you have to have what's called a tier 1 option trading authorization. There's tier 1, tier 2, tier 3, and tier 4. Okay, so it literally, you go in and go click, 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 and it's approved. Okay, because it's that conservative. Okay, and we're going to get into the nuts and bolts of it a little bit here. Okay, any potential loss is the same as if you just owned the stock and never did the covered call. Okay, so your loss potential is exactly the same as if you just held your 100 shares of stock. Okay, here's the downside, potential downside is actually, it's not even a potential downside. If you do this, it is a downside, and that is your gain can be capped. And we're going to dig into some, take my word for it on the moment here, guys. We're going to get into some examples that make it a lot easier to get. Okay. It is impossible to lose money based on selling the option position. Okay. I do want to talk, I am going to jump ahead here a little bit. Let's define some terms.
Okay.
Losing money is not the same as losing potential gain. Okay. So losing money, think of it this way. Losing money means your account balance goes down. That's losing money, right?
Sure. Yeah.
Okay. Loss of potential gain means if I had not sold the option contract, I might have made more money. But that's not the same as losing money. Make sense? All right. That's going to become, and that'll become more obvious here as we go through the examples. Okay. Go back one there, brother.
Okay.
The opposite of a covered position is a naked position. Okay. So covered means you own the underlying stock. Okay. The naked option. So if you own 100 shares of NVIDIA at, I don't know, 180. All right. And you sell me the option to purchase them at 200 and it goes to 205, your stock is going to get called away from you, but you're going to sell it at 200. Okay. That's covered. A naked option is where you don't own the underlying stock. And that is where huge losses can happen, potentially infinity.
Really?
Because you would be obligated under a naked option. Let's say NVIDIA is at 180. You sell the naked option at 200. Okay. And it goes to 200 and a penny. You have to go on the open. When I take that option contract from you, okay, when I exercise that, you have to go buy NVIDIA on the open market at $200 and a penny and give it to me. Okay. What if it goes to 1,000 a share? You have to go buy it on the open market at 1,000 and sell it to me. Give it to me at 200, and I'll pay you 200 a share for it.
Sure
I don't play with these guys. Okay. I don't play with these. Okay. Or if I shouldn't say I don't, I do. But as we talked about last week, when I showed you a couple of my positions, very small dollar amounts. Okay. Yeah. Very small. Okay. And actually, I don't sell the naked options. I purchase them. So I'm on the other side of that equation. So I do not sell the naked positions. Don't do it. I never give financial advice, but I'm going to tell you right now, don't do it. Okay. All right. So we already talked about
very little upside and huge downside. Is that what you're saying?
Oh, there's huge upside as well.
Oh,
it's huge on both ends with the naked positions. It's a highly risky thing to do. You're either a hero or a zero. There's no in between. Okay. And it's not even you're a zero, you're a negative. Okay. Yeah. So let's define losing money. Losing money is your account balance goes down.
Okay. Is that what was going on with GameStop? These people had a naked position.
So what they did there. So I'm a little bit making up the numbers because I can't remember the exact numbers.
Mm-hmm.
So what was happening was GameStop had a terrible business model. They were losing money. Everybody expected them to go bankrupt. So a whole bunch of hedge funds were shorting, doing naked shorts
Mm-hmm.
on GameStop. Okay. So let's just say GameStop was at $20 a share. They would go in and short it. Okay. Now there's an expiration date on these. So let's just say it was February 20th. Okay.
Mm-hmm.
Now GameStop starts going up. Okay. When you naked short something, it's done on margin. You borrow the money to go do that. Because remember, you borrow the stock and then you go sell it on the open market at 20 a share. And you're hoping it goes down to 10.
Mm-hmm.
And when the option expires, you buy it back and you pocket the difference. Excuse me. Okay. But if it starts going up, at some point, you're at least going to get margin called where you have to put up some cash to keep 20% down in that position. Okay.
Mm-hmm.
Or upon expiration, you have to buy the stock on the open market to give the borrowed shares back to the brokerage house. Here's what happened. Some guys sitting around on Reddit.
Yep.
What was that guy's name?
Something kitty.
Roaring Kitty. Roaring Kitty.
Roaring kitty, yeah.
He was the first one that figured out, because all this is public data, guys. You can
Yeah.
go look up what's the short positions on Netflix. Okay.
Mm-hmm.
I watched that one because Netflix is down a lot
Yep.
right now. And I think they're going to come back. I think they're getting unfairly beaten down. I think long term they're a really good buy. But I'm waiting for the shorts to get out of there. So anyway, back now for my squirrel moment there. So GameStop was at 20, whole bunch of hedge funds went in and shorted it. There was 140% of the outstanding shares were shorted. They just kept borrowing and selling, borrowing and selling, borrowing and selling. And it kept working because there's all this downward pressure. There's all this selling, right? Because when you borrow those shares, you sell them. Well, that drives the price down. They figured out there was more short positions than there were shares available to buy. So they started going in and buying naked options, which creates demand. It started driving the price up. Okay. All of a sudden, these hedge funds, so their expiration date comes up on February 20th, and they borrowed shares at 20 and sold them. And suddenly it's at 400.
Yeah.
And they have no choice. They have to go buy at 400 and replace those borrowed shares. That's what happened there. Those were naked shorts that they figured out went against them. And now there's a lot of people out there in the financial Reddit community that watch this like a hawk.
And that's your classic meme stock right there. That is.
Yep.
Classic.
And that was, it's, I know what you're saying, but it didn't go up that much because of any they didn't turn their business around.
No, of course not.
This was simply manipulation, if you will. Okay. Because GameStop was going out of business at that point in time. Nobody was going to a brick and mortar to buy video games. You just go on whatever and download them and play them, right? Or you go on Amazon and buy them. Nobody's going to GameStop. So this was hedge funds betting on what was going to be the most likely outcome. They just got greedy and went too much, and somebody figured it out.
Good on them.
Yeah, absolutely. I also find it ironic every time this subject comes up. Elizabeth Warren was the one that went in and saved the hedge funds. I love talking about that.
Yeah.
So,
well, same thing with Robinhood. Oh, we got this great trading platform, and they stopped trading for the little guy to let the hedge funds dump their positions. So they're
absolutely locked them out.
Anybody that puts a penny in Robinhood, you deserve whatever happens to you.
Yep.
What does Tony say?
So it's safe to say that none of these problems would exist if it weren't for the secret in the middle of the night creation of the Fed and the IRS in 1913. What if the government had to survive solely on tariffs and trade deals like before the extortion of citizens began? How limited will our government be today, and how prosperous might the average Joe be? Okay, so yes, this is all from the Fed. This is the devaluing of the dollar. And in fairness, without monetary inflation, it's very difficult for an economy to grow. Because if you truly limit the amount of money floating around an economy, how much growth can you really have? Okay.
Yeah.
Good, bad, or indifferent, it is what it is. Okay. And it's the game we have in front of us, right? How limited will our government be today? Very. Same way it was back then. There was no Medicare, no Social Security, no safety net, and we can argue the pluses and minuses of all those things. Again, it is what it is. So it'd be much more limited today than it was back then. And this is the one I may not give you the answer you're expecting. How prosperous might the average Joe be? Not very.
Yeah.
Right. So it'd be more stable.
Yeah.
That's for sure. It would be much more stable. The problem with stability is there's not a lot of growth and stability.
It still have a lot of yeoman farmers, probably.
Exactly. So it's a give and take. And if there's one thing I try to impress upon myself as a reminder and my kids and you guys is understand the mechanics of the game.
Yeah.
The 2% inflation target, do you know where that came from, Rich?
I'm sure they just pulled it out of the air. I don't know.
You're really close. Some central banker from New Zealand at a big conference of central bankers said, I think 2% is about right. And everybody went, yeah, sounds good.
And there we go.
2% inflation. That's how they came up with the 2% inflation target. They just all looked at each other and went, sure, we'll run with that. But a 2% inflation is a constant devaluing of the dollar, of course, which drives nominal economic growth.
But it's a manageable devaluation.
Yes. And what they're looking for is a manageable, stable devaluation. In other words, if it's 2% year after year after year, we can count on that. We can predict based on that. What they can't handle is this.
That's right.
Okay. Because eventually that turns into deflation because at some point in there, people get scared enough, they just stop. Okay. And that's why you'll keep hearing all this about, we need it to be manageable and stable and predictable. It's no different. Businesses and governments are no different than us guys. We want to know what the next paycheck is going to be about and am I looking at a pay raise next year, about how much. We all want the same thing because at the end we're all emotional, right? All right. So how's a covered call work? First, you buy the stock. So you buy 100 shares of XYZ, at least. If you're going to do one contract, it's 100 shares per contract. Okay. You can own 1,000 shares and write one contract for 100 shares. Okay. But you got to have at least 100 shares. Okay. So you sell the option to purchase the stock with these conditions at a given price, a strike price. Okay. And the next chart we're going to get in, or next slide rather, we're going to get into some specific examples that'll help this make sense. By a given expiration date, also called an expiry. So we're going to use February 20th as an example. And for a given premium.
So we purchased today and we're using February the 20th. Is that what you're saying?
Okay, exactly. And the examples I use today's date. Okay. So let's say we buy 100 shares of NVIDIA I just got an alert. It just hit 186. Okay. So we buy 100 shares of NVIDIA at 186. Okay. And I can't remember the exact number I used in the chart. Okay. We buy it at 186. And then I sell Rich the option. Actually, I'll switch around. Rich buys 100 shares of NVIDIA at 186, and you sell the covered call option for $200 a share on February 20th. Okay. For a dollar a share. I didn't use real numbers on this. Next week, we're gonna use some real examples. I'm gonna fire some up today, and then next Monday, we're gonna talk about how they worked. Okay.
Okay.
So you bought it today for 186, 100 shares. You sell me the February 20th $200 call option for $1 a share. So I hand you $100, $1 per share times 100 shares. I hand you $100. No matter what happens after this, you keep that $100, brother.
Okay.
Okay. So, and then we see how it shakes out between now and February 20th. So you're making a bet that it won't go above 200 because you want to keep my $1 a share, right? I'm making a bet that it's going to go above 200, right? So that I can buy it from you for 200. If it goes to 210, I still buy it from you for 200.
Yes,
okay?
Exactly. Right.
Right. Okay. So let's do some examples here. Okay. There's the good, the bad, and the ugly. Okay. We're going to do the good first because it feels better. Okay. So this is different numbers here because this is just, I just use XYZ stock, and sorry guys, my formatting got goofed up here. All right. So right now, XYZ stock, as you can see on my bar there, is at $100 a share. So it's $100 a share right now, Monday morning. Rich goes and buys 100 shares of XYZ stock. Okay.
Okay.
Now you sell me the February 20th, right?
Yep.
Option for 110 a share.
Okay.
Okay. You're going to get $1 per share. I'm going to pay you $1 per share for this option. No matter what happens again after this, guys, you keep that dollar per share.
Okay.
Okay. Always, always, always. Okay. And that's why this is conservative. Okay. So,
But it can be any amount, right? Or is there always $1 a share?
no, it's different amounts.
Okay.
It's based on how much time. If this was a year out, then you would want a lot more premium to take that risk of having to sell it for only 110, right? I mean, if this is Nvidia at 186 and you were selling the $200 option on that, you'd want more money to take that till December 31st instead of February 20th, right?
Yep.
Because there's time value there, right?
Okay.
Options are all about time and price, time value of the option, because there's an expiration, right? Unlike a stock, there's no time value in a stock because you can sell it anytime you want. Options have an expiration date, therefore there's a time value based on how far away that expiration date is, and that changes every day because it gets a day closer to expiration, right?
Yep.
Okay, so you get $1 a share between in our XYZ example, you buy 100 shares at $100 a share, and then you sell one covered call for 110 at 110 strike price with an expiration date of February 20th. And people will be like, I got $1. I mean, we're used to hearing, Nvidia's up $18 today. We used to hearing these big numbers, right?
Yep.
And when I first started looking at this, I'm like, $1 a share. I mean, big deal, big whoop, right? Well, you got to remember that's $1 a share, in this case, a 1% return in 18 calendar days, counting weekends here, okay? Well, if we math that out, that's 20% annualized, brother. Because you take 1%, divide that by 18 days times 365 days in a year, that's a 20% annualized gain. I don't know about you, but I can build a retirement plan around that.
Heck yeah, buddy.
Okay. Now, this is the good. Now, let's say the stock price goes to, as you see my green box up there, it goes to $109.99 a share. I cannot, you sold me that option, right? That was a 110 option. Didn't make 110, did it?
Nope.
So now you went up $9.99 per share, plus you got my dollar, and I can't exercise the option. So now you made, in the week, you made more money because you sold the option.
Yeah.
Yep. So, you win, I lose. That's how options work. Unlike stocks where we can all buy XYZ stock and we all make money, options contract, somebody wins, somebody loses. Period. End. Okay. And the oldest law of the jungle is dog eat dog, right?
Yep.
So
that's the good.
That's the good. Here's the bad. Okay. This is where people say, well, I lost money. And I will argue you did not lose money. You lost potential gain.
Correct.
Okay. So it depends what a person's looking for out of this, right? Like you and I look at gold in different ways. In some way we look at it the same. In some ways we look at that differently, right?
Correct.
It's the same thing here. Okay. So this is the bad. Okay. Same example, XYZ stock at 100 a share. You go buy 100 shares. You sell me the February 20th covered call for 110. Okay. But now it goes to 120 a share. You have to sell it to me for 110. But you still kept the dollar too. So you can make the argument that you actually made $11 a share, not 10. Takes a little bit of the sting out of it, right? But that other $9 a share from 111 total. I'll run my example here. So you lost the gain from 110 to 120, right?
Yep.
That's the way it is, right?
And it's gone. I've sold it to you. It's gone forever. Now, if you exercise it, but you don't have to exercise it, you'd be stupid not to. But
exactly right. Yeah. Because now, why am I doing this? So people go, well, why would I buy this why would I spend this premium? Because I'm spending it because I'm never getting that premium back. That's a spend. Okay. I'm spending the premium of $1 a share to get that. Well, if you look at it, if you net out my side of this, I spent $1 a share and then I buy it from you for 110 and sell it for 120. That's $10 a share, but I got to take my dollar out, right?
Yep.
So I made $9 a share. So I 9x'd my money.
Yep.
That's why people buy options, like I did with the SLV stuff, right? Okay. This is why people buy the options. So I'm the gambler in this scenario. Okay. I try to keep this realistic. I didn't make you the gambler. Okay. So I'm the gambler. Gold's a meme stock.
You found a button I didn't even know I had.
I'm gonna have to tell Miss Lisa about that.
Okay.
You just walk through the house and be like, silver's a meme. So maybe I should, you know what? I still got some onesies left for babies. I should make one for Remy that says gold is a meme chart.
You might give me the shaking baby syndrome.
So this is as the writer of the covered call. You in this example, you own the stock. You're writing the call option for someone to purchase, right? You're the conservative side. I'm the gambler. And what we are doing with writing covered calls is we are making money off their desire to gamble. Make sense?
And in truth, like you said, I lost potential gains.
Right.
Right. I mean, because
technically
I made some money, but it's not as much money as I would have liked to have made, kind of thing.
And if we go back to the mentality of it, what was the first thing you asked me about the gold and silver drop this morning? Did you realize it?
Yeah, exactly. Yeah.
Right. This is the same mentality. It just, honestly, it hurts more in this case because it's like, rats. Okay. But that's that FOMO, right?
Yeah.
Okay. So we have to, this is not how, using these covered calls is not how a person builds a huge portfolio. You won't do it off covered calls, even 20% annualized, because in this case, you could have had more, right? So this is where I use it as a guy in his late 50s. I don't need to hit triples and home runs to have a comfortable retirement. I'm very blessed that way. I can hit singles. I can even bunt for singles. So I can do stuff like this and guarantee that income stream off of these shares. And if it gets, and people are like, oh my gosh, my stock got called away. Okay, rebuy it. If you still think it's a good deal, rebuy it.
Yeah.
Okay. There's nothing stopping you from doing that. Okay. One thing I will cover here real quick is options are always taxed. If you're doing this outside of a tax deferred account, you can do calls, these conservative tier 1 covered calls. You can do this inside. I do it inside of an IRA, and I'm very fortunate I can do it inside my 401k as well. Okay. Yes. If you're doing it in a regular brokerage account that is taxable, options are always taxed at short-term capital gains, which can hurt. Okay. The highest rate for that is 40%. So you can lose basically half your gain here, which changes the math a little bit. I don't take taxes into account on these because I typically don't do much of this inside the brokerage accounts. Okay. So be aware of that. Full disclosure here. Okay, guys. Okay. All right. So this is the bad. Okay. And now let's do the ugly. Okay. Now, what I'm going to tell you right now is that ugly is ugly, but the covered call actually makes it less ugly. All right. So what happens if the stock goes to 80? So you buy XYZ at 100 a day, Rich, and you sell me the February 20th 110 call, and I pay you $1 a share. But dang it, XYZ stock goes down to 80. You still kept the $1 a share.
Yep.
I can't exercise it because it never made 110.
Right.
So you actually lost $19 a share when you even everything out. You lost $19 a share, not 20. That's as ugly as it can get, guys.
But again, that's only if you realize it. If it bounces back next week and you didn't sell it, then you're fine.
So let's say it goes back up to 100, to your point, in the next week. Now your total account balance is $100 a share plus the $1 a share you got from me.
Yeah.
Right?
Yeah.
So this is a way to somewhat protect downside. there's a better way, and we're going to dig into that. Next week, we're going to do real world examples of these, and then we're going to start digging into the way I use these as insurance.
So so if I'm the guy that bought this, this option, and I gave $100 right out of the gate. I could always look at it like, I lost $100, but man, at least I'm not the guy holding those 100 shares.
Exactly.
Especially
right.
if it's going, the trend is to go down. Like,
right.
Thank
But
God,
now let's
I only lost 100.
So let's look at this from SLV, the ETF for silver, right? So this is a strategy that some people like me may have used last week, going, you know what, this thing's had a heck of a run. Silver's been up 10 months in a row. At some point, we're going to see a pullback. So you sell some just out of the money covered calls on your SLV shares, and then when it drops, I'm keeping that premium. So it's a way to buffer that loss a little bit. Now, when SLV goes down 30% in a day, getting 1 or 2% for the covered call, honestly, doesn't really help that pain very much. But it does help, right?
Sure.
So like you said, though, if I am going to hang on to that for years and years and years, do I really care? Maybe I take that little bit of premium I got, and if I'm really serious about buy the dip, I'll use his money to buy some more.
Yeah.
Right. So in this case, you sell me the covered call on SLV, and now you take my money and use it to buy the dip. Now it's not a ton of money, right? But it's a little bit, and that lowers your average cost basis then, right? And then if it goes back up, now you've bought the dip with somebody else's money, and other people's money is my favorite kind of money.
Agreed.
I ran across this one. What's this one say, brother? I love this one.
Nobody celebrates your discipline until they need your results. Boy, that's a freaking fact.
Yep. So that's the basic of covered calls. That makes sense, brother? Anything you want to touch on again?
Fantastic examples, man.
Okay.
Once again, crushing it. I appreciate it, brother.
Well, I'm glad it made sense, because I'm trying to, keep my own enthusiasm about this stuff in check sometimes. Next week, today, I'm going to fire up some examples of this, real world, real numbers, and it's going to be for expiration this coming Friday. And then Monday, we'll review those. And I'm going to pick one good, one bad, and one ugly. And I'm going to have to kind of go back through. I'm going to come up with a whole bunch of them. And I'm hoping something goes down this week to make this work.
Well, I appreciate it, Will.
I'm happy to do it, guys, and hope you guys are getting something out of it. And it's all part of the game. So if any of you guys have questions on this stuff, throw something up in the coin members area of American Warrior Society, and I'll do my best to explain it, and maybe even cut a short video if there's a question that requires a little digging on that. But the one thing to understand, guys, all these covered call options we're going to talk about are there's no margin, there's no borrowed money, there's as bad. If we go back to that ugly chart, brother, that's as bad as it can get. And it's better than having just owned the stock, right?
Yeah.
That's why I like these. Okay. So yes, you can lose potential gain. And some people would say that's the worst example. It depends where you are in life. If you're in your 20s, I would not be doing this, because you're more about the gain, right? It's different for guys in their 50s and so on and so forth. So next Monday, we're going to do the real world examples of these. Okay. And then after that, we're going to get into how it changes if you, instead of having your strike price above the current stock price, you go below the current strike price, or below the current stock price. So in our example, your $100 XYZ, what happens if I sell the $80 call? And that one's going to take a little bit longer. The math on that one honestly took me a little bit to wrap my head around. That's where we get into where you and I started this discussion offline. It gives you downside protection. So that one's, I don't want to go any deeper on that right now, because that one's way better with some visuals. But that's the one that I'm using a lot of, and it's actually completely changed my retirement plan.
I love it.
Yeah. So, all right.
Well, take us out.
Fight's coming, guys. Be ready.